Every morning, across countless homes, families gather. They chat, they plan, yet often a quiet concern lingers, a whisper about the future we're building. Our economic landscape, much like these fields, seems calm on the surface, but beneath, currents are shifting, preparing for what comes next. We constantly strive for balance, a steady path forward. Yet, the forces that shape our lives, inflation, opportunity, are always in a delicate dance. At the heart of it all stands an institution, tasked with guiding this delicate rhythm, the Federal Reserve, a guardian of our collective prosperity. Their decisions echo through every household, every business, shaping the very ground beneath our feet. An immense responsibility, quietly borne. For years, they've navigated turbulent waters, making choices meant to steer us towards stability. Each move, a ripple across our shared economic ocean. Then, a voice emerged, gentle yet clear, from within those very halls. A seasoned perspective, offering a path few expected just moments ago. Mary Daly, a key voice at the Federal Reserve, spoke of something significant, a December rate cut, a surprising note in a persistent melody. Amidst whispers of persistent inflation, her words landed with a gentle thud. Could the winds of monetary policy truly be changing course so soon? Here lies the profound challenge, the Fed's delicate dance. How do you soothe soaring prices without chilling the very spirit of our work? It's about more than just numbers. It's about the vulnerability in our labor market. Are the jobs truly stable? Are opportunities still abundant? The path chosen means everything. To control inflation or to protect livelihoods from a downturn. A crossroads that shapes countless futures. For a while, rising prices were the undisputed foe. The Fed acted decisively, raising rates, hoping to tame the cost of living for everyone. This fight against inflation had consequences. Gentle tremors felt in the job market. A subtle slowing, a quiet apprehension began to spread. Now, we stand at this precipice. A new assessment, a fresh perspective, asking if the medicine might now be too strong for the patient. The economic crossroads beckons. What delicate balance will the Federal Reserve strike next? And what will that truly mean for us all? We often look at the big picture, the grand numbers that paint a story. But sometimes, the true tale hides in the quiet whispers, in the delicate brushstrokes unseen by many. Today, we delve into those whispers, the deeper currents influencing figures like Daly. It's about understanding the vulnerabilities beneath the surface. Her stance, a call for a December rate cut, wasn't born from simple data. It stemmed from a profound empathy for the quiet struggles impacting so many lives. The labor market, often seen as a beacon of strength, holds its own fragile truths. Beyond the headlines, a different story begins to unfold. We often celebrate low unemployment, a statistic that feels so reassuring. Yet, what if that number doesn't quite capture the full, complex human experience? Daly urged us to look deeper, past the surface calm, to the subtle signs of vulnerability. She spoke of underemployment, a quiet weight on countless shoulders. Imagine working tirelessly, perhaps 2 or 3 jobs, yet still not earning enough to truly feel secure. That's the heart of underemployment. It's not about being jobless. It's about being underutilized, a talent waiting to blossom but trapped by circumstances, a silent drain on potential. These are the stories of individuals working fewer hours than they desire, or in roles far below their skill level. Their commitment remains, their spirit strong. This isn't just a statistic, it's a profound human experience. It's the constant worry, the stretching of every dollar, the quiet exhaustion after long days. The economic impact is profound. It means less spending, less confidence, and a slower pulse for our shared economic heart. We feel it, even if we don't name it. Daly's insight calls us to see beyond the numbers, to feel the ripple effect of every unfulfilled hour, every strained budget in our communities. Then there's the quiet departure, the labor force participation rate. It speaks to those who simply aren't counted anymore. They've left the official search. Why do they leave? Sometimes it's discouragement, the endless search leading to weary resignation. Sometimes it's the weight of caregiving or other responsibilities. Each person who quietly exits the workforce represents lost potential, lost dreams, and a subtle weakening of our collective economic fabric. This isn't just about jobs. It's about life choices, about families making hard decisions, often out of necessity. It's profoundly human. When fewer people are actively engaged, the vibrancy of our communities, the flow of innovation, can slowly diminish. It's a subtle shift, but meaningful. Daly reminds us that these quiet shifts, these personal decisions, cumulatively paint a broader picture of economic health. We must acknowledge them. It's about the balance. A vibrant economy thrives when everyone who desires to contribute can. The participation rate whispers of an imbalance. And then, the quiet crunch. Wage growth deceleration. For so many, their earnings aren't keeping pace with the rising tide of everyday life. Imagine working just as hard, perhaps even harder, but seeing your paycheck by less and less. It's a feeling of slow, creeping erosion. This isn't just about inflation, it's about the human struggle to keep up. It's the silent recalculations at the grocery store, the postponed dreams. Families feel this deeply. The decision to forego a small luxury, to delay an important purchase. These are not just economic choices, they're personal ones. When wages slow, the engine of consumer spending, the very lifeblood of our economy, sputters just a little. A small slowdown creates larger echoes. It's about dignity. It's about the feeling that your hard work isn't fully valued, or that the system isn't quite working for you anymore. Daly's focus on wage deceleration highlights a fundamental vulnerability that affects daily lives, shaping futures, quietly reshaping our society. And sometimes, the pain is concentrated. Sector-specific job losses, entire industries, entire communities facing unique, heavy challenges. Imagine a town built around a single industry, where suddenly the work disappears. The ripple effect is devastating, touching every home, every dream. These aren't just numbers on a chart. These are individuals, neighbors, friends, facing uncertain futures, forced to adapt to sudden, brutal changes. From manufacturing to tech, particular sectors experience tremors. It's not a uniform slowdown, but targeted, impactful shifts that hurt deeply. The fabric of communities can fray as people leave in search of new opportunities or bravely try to reinvent themselves in unfamiliar landscapes. Daly recognized that these concentrated losses demand specific attention, a compassionate understanding that broad strokes simply cannot provide. It's a reminder that beneath the national averages, there are unique human stories unfolding, stories of resilience, but also of profound need. Our world is wonderfully interconnected, and so too are our economies. A gentle chill abroad can send shivers down our own domestic spine. The broader global economic slowdown whispers of reduced demand, of cautious investment, and a collective holding of breath across continents. When our trading partners slow, our own growth can feel the effect, like a gentle current pulling at a boat. It's a shared vulnerability. This global caution translates into less urgency, less price pressure. It's a natural counterpoint to the inflationary spirals we've known. Remember the frenzy of supply chain disruptions? Now, a quieter hum. Normalization means goods move more freely, costs stabilize, but demand might too. This return to a smoother flow contributes to disinflationary pressures. Prices, once soaring, find a gentler path, which is a relief for many. Yet, this calmness can also reflect a cooling demand. It's a delicate balance, where stability is welcome, but stagnation is a worry. And then, the unseen currents. Geopolitical events, often far removed from our daily lives, subtly shape the global economic landscape. These events create uncertainty, influencing trade, investment, and ultimately the mood of the market. Their echoes reach our homes in unexpected ways. Bringing it all together, these subtle vulnerabilities, from underemployment to global ripples, paint a compelling picture for a policy pivot. Daly's call for easing for a potential December rate cut isn't just about numbers. It's a heartfelt response to these deep human needs. It's a recognition that true economic health means nurturing the most vulnerable, creating a softer landing for everyone, with wisdom and genuine compassion. Sometimes, to truly understand the whispered anxieties and quiet hopes of our world, we must turn our gaze to the numbers, to the stories they silently tell. These aren't just cold statistics. They are echoes of countless lives, a delicate pulse we feel when we listen closely with our hearts. Our journey begins by sensing the rhythm of our labor market, that vibrant heart of our economy where dreams and livelihoods intertwine. There are whispers now, subtle shifts suggesting a quiet softening, like the first gentle breeze of autumn after a long, vibrant summer. The official reports, the BLS data, paint a broad strokes picture. For a time, job growth soared, a beacon of collective progress. Yet, we observe a more measured pace today. The frantic rush has eased, giving way to a more thoughtful, perhaps even cautious rhythm. The unemployment rate, a quiet barometer of human struggle and triumph, suggests a subtle tremor beneath the surface calm. Are we sensing a shift? Then we look to JOLTS data, specifically job openings. Once a roaring demand, the number of available positions seems to be gently receding. For those seeking new beginnings, the landscape of opportunity might feel just a touch less abundant, a subtle quiet where bustling activity once thrived. The hiring rate, too, tells a story of moderation. The enthusiastic recruitment drives of yesterday are now a more considered, deliberate process. Even the quits rate, a sign of worker confidence, seems to be easing. Fewer are taking that leap of faith, preferring stability in uncertain times. And then the challenger job cut announcements. These aren't just figures. They're the poignant stories of companies making difficult, heartfelt decisions. Each announcement carries the weight of personal impact, a quiet disruption to lives and families, a ripple effect through communities. Together, these threads weave a picture of a labor market breathing a little slower, settling into a different rhythm, one of caution and reflection. But as the labor market finds its new cadence, another powerful force shapes our everyday lives: the persistent, elusive dance of inflation. For so many, inflation isn't an abstract concept. It's the quiet squeeze felt at the grocery store, the stretching of every hard-earned dollar. The Consumer Price Index, or CPI, offers us a snapshot of how prices for everyday goods and services touch our wallets. We've witnessed its powerful ascent, a tidal wave that swept through our budgets. Now, a hopeful current suggests a gentler, disinflationary flow. The Personal Consumption Expenditures, or PCE, offers a wider lens, reflecting how we, as individuals, truly spend and experience costs. It's the Fed's preferred measure, a deep dive into our collective spending habits, seeking to understand the true cost of living our lives. To see beyond the fleeting spikes of energy or food, we look at core inflation, revealing the deeper, more structural price movements. It's like looking past the choppy waves to see the steady, underlying current of the ocean. This helps us discern true, lasting change. Are we witnessing genuine disinflationary forces at play? Are the pressures easing, bringing a sense of relief to our collective pockets? But are these forces merely transient, a passing whisper? Or are they structural, deeply woven changes promising lasting price stability? To gauge our present, we often look to the past. Historical labor market trends offer echoes, reminding us of previous rhythms and shifts. How does this softening compare to other times? Are we charting a familiar course or venturing into uncharted, subtle waters? Similarly, historical inflation rates provide a mirror, allowing us to reflect on past battles fought and the lessons they silently impart. Are these disinflationary whispers truly a return to calmer times? or a temporary lull before another shift in the economic winds. These visual aids are more than just graphs. They are windows into our economic heart, making the complex tapestry feel truly tangible. We see now a delicate dance, a labor market gently easing and inflation slowly, hopefully releasing its tight grip on our lives. This intricate data isn't just about abstract numbers. It's about the everyday realities, the hopes for stability, the dreams for a secure future. Understanding these shifts helps us glimpse what lies ahead, not with certainty, but with a deeper, more empathetic anticipation for tomorrow. For in these numbers, when we approach them with an open heart, we find not just facts, but the very pulse of human experience. After gazing at the present's intricate tapestry, we now turn our eyes to the whispers of the past. For in history's quiet echoes, we often find keys to tomorrow. To truly grasp where we stand, we must feel the path walked before. Every decision, every hesitant step leaves a trace, a lesson for today. Our journey begins along a winding timeline, guiding us through moments when tough choices shaped economies and countless lives. It's a delicate dance. Imagine those early days. The Fed, a new guardian, faced a daunting tightrope walk, controlling prices while ensuring people could find meaningful work. Sometimes the shadow of rising prices loomed largest. The temptation to tighten, to cool the economy, felt like the only path, a necessary, if painful, medicine. But then the faces of workers, of families needing stability, pulled at the heart. Their livelihoods, their dreams, hung in the balance. A powerful counterargument: picture a time when fear of inflation led to quick, decisive action. Rates rose, intending to cool a fever, but sometimes they chilled the very soul of the economy. And, just like that, the gentle hum of prosperity quieted. Jobs, once plentiful, became scarce. The dream of a secure livelihood, for many, faded into uncertainty. A sudden chill settled over the land. Businesses, once vibrant, struggled to breathe. Growth, that steady rhythm of progress, faltered, leaving a stillness that felt profound. Then there were moments of hesitation. When the economy needed a gentle hand, a supportive push, the response was slow, like waiting for a storm to pass. And so, like an unchecked fire, prices began to climb. The cost of living, once manageable, became a relentless burden, eroding the simple comforts of daily life. For those who had saved, who had planned, this creeping inflation felt like sand slipping through their fingers. Years of careful effort slowly diminishing in value. The Fed's path has always been this precarious tightrope walk, balancing these powerful, opposing forces. Hoping to find that elusive sweet spot is a constant challenge. At its very core, the Federal Reserve carries a dual mandate, ensuring every willing hand finds work and protecting the quiet power of our hard-earned dollar. Think of maximum employment not just as numbers, but as dignity, purpose, and the shared dream of building a better life. It's about every family's security and price stability. It's the quiet assurance that your savings will hold their worth, that the future feels predictable, allowing dreams to truly take root and grow. But what happens when these vital goals tug in opposite directions? When the path to one seems to jeopardize the other, creating a profound dilemma. And so we find ourselves now feeling these same historical echoes. The past isn't just a story, it's a guide, showing us the weight of these choices today. We hear the whispers of a vulnerable labor market, a quiet concern for those whose jobs feel less secure. It's a human story, not just a statistic. Yet, the memory of rising prices, that unsettling feeling, hasn't fully faded. It's a lingering shadow, making the path forward feel uncertain and complex. These aren't just abstract economic terms. They are the fabric of lives, families, and futures, tugging at the heart of every difficult decision made. In moments like these, we turn to those who've dedicated their lives to understanding these intricate currents. Their wisdom offers different pathways forward. some wise voices caution against haste, fearing that tightening too much could unwittingly extinguish the fragile flame of growth and opportunity for many. They remind us that the ripple effect of such decisions can touch every corner of our lives, creating unintended hardships for the most vulnerable. Others, with equal conviction, emphasize the persistent threat of unchecked prices. They argue that stability is the bedrock upon which all other prosperity rests. For them, ensuring that our money holds its true value is paramount, a silent promise to every person striving to build a secure future. And then there are those who've sat in those very chairs, feeling the immense weight of each choice. They speak of the profound human stakes involved. It's a tapestry, woven with countless threads, each policy decision pulling at others, creating a delicate, intricate dance of consequences we try to anticipate. Every adjustment, every carefully chosen word sends ripples far beyond the boardrooms, touching lives in ways we can scarcely imagine, shaping their daily realities. There are no simple answers here, no perfectly clear roadmaps, only thoughtful deliberation, weighing profound trade-offs and hoping for the wisest path. Yet, in this complexity, there is also hope. Hope for wisdom, for empathy, for decisions made not just with data, but with a deep understanding of human lives. The Fed's journey is this unending balancing act, a constant striving to honor both mandates, to protect both the economy's pulse and people's well-being. As we reflect, perhaps we can offer understanding to those tasked with such monumental choices, remembering the human heart behind every economic figure. We often see our economy as a quiet pond, but look closer, and you'll realize it's part of a vast, interconnected ocean, where every ripple touches every shore. No nation truly stands alone. The whispers of distant markets, the rhythms of foreign growth, they all find their way back to our own doorstep. Our focus today expands beyond our borders, recognizing the invisible threads that tie us to economies across the globe. It's a dance, a shared breath. The Federal Reserve's decisions, while domestic, resonate far beyond. They are part of a larger conversation, a global economic symphony. Imagine diverse gardens, some blooming vibrantly, others finding their rhythm. Global economic growth varies, creating a complex tapestry of progress. When economies abroad thrive, their prosperity can spill over, creating opportunities and challenges that reach our shores. It's a shared current. Strong growth overseas means greater demand for our goods and services. It breathes life into our industries, offering a hopeful horizon for many. But if other nations falter, their struggles can send chills through our own markets. We feel their pause, their uncertainty, deep within our own economy. Currencies are like living breaths, constantly shifting, gaining and losing strength against one another. It's a delicate, ongoing waltz on the global stage. A strong dollar can feel like a badge of honor, signaling confidence. Yet, this strength can also make our exports more expensive for buyers abroad. For businesses here, competing internationally becomes harder when our currency rises. It can feel like swimming against a stronger, unseen current, making sales tougher. Conversely, a weaker dollar can make foreign goods pricier for us, subtly impacting everything from our morning coffee to the cost of our daily necessities. Across the Atlantic, the European Central Bank makes its own weighty choices. Their policy decisions ripple through the Eurozone, touching countless lives. When the ECB adjusts rates, it affects European consumption and investment, and inevitably this sends vibrations across the global financial landscape, including ours. In the East, the Bank of Japan navigates its unique economic waters. Their delicate balancing act impacts global bond yields and investment flows. Japan's economic health, shaped by the BOJ, plays a role in global stability. What happens there, even subtly, influences the tides felt by businesses everywhere. And then there's the People's Bank of China, a massive force whose policy decisions echo through the world's second-largest economy. Their moves on interest rates or currency management directly affect global manufacturing, trade, and even the price of goods we see on our shelves. Imagine three great rivers, each flowing with its own power, yet all eventually converging. The policies of these central banks don't exist in isolation. The Fed watches, listens, and considers these global currents. It's a complex, living symphony where every instrument affects the harmony of the whole. These external forces, from far-off decisions to shifting currency values, create a palpable pressure on our US economy. It's a continuous, dynamic push and pull. The dollar's strength isn't just about national pride, it's about competitive edge. When it's strong, our exports might struggle, impacting jobs and profits. For a small business, a stronger dollar can make imported materials cheaper, yet simultaneously make it harder to sell their products overseas. It's a complex dilemma. This intricate dance can influence production lines, investment decisions, and ultimately the livelihoods of countless American families. Often silently, subtly, money, like water, seeks the most fertile ground. Global capital flows constantly shift, drawn to higher returns or perceived safety, impacting our markets profoundly. Our trade balance, the difference between what we buy and what we sell, is a living barometer of our global economic health. It reflects demand, competition, and trust. Commodity prices, the cost of oil, wheat, metals, are universal languages. Their fluctuations are felt in every home, impacting everything from fuel to food. A disruption far away, a shift in supply, and suddenly the price of our daily bread or gas at the pump changes. We are all deeply connected. These global currents, the capital, the trade, the commodities, directly influence our domestic inflation and employment figures. They are not separate entities. Understanding these external forces is not just academic. It's about grasping the full picture of our economic well-being, both inside and out. Every stream, every river, no matter how distant, contributes to the overall level and flow of our own economic lake. It's all interconnected, profoundly. So, a December rate cut by the Fed isn't just a domestic adjustment. It's a signal, a wave that will ripple across oceans, carrying global implications. It acknowledges the world we live in, one where our prosperity is intertwined with the fortunes of others. A delicate balance, a shared path forward for us all. We've journeyed through the intricate tapestry of our economy, tracing threads of hope and worry. Now we stand at a crossroads, looking into the unfolding future. The Federal Reserve's next move feels like a whisper carried on that wind, a delicate decision that will ripple through every aspect of our lives. Will they ease the reins, offering a moment of relief, or hold steady, prioritizing caution? The path forward feels less like a straight line and more like a gentle curve. A potential December rate cut, a notion now openly discussed, could be like those first warm rays of sun after a long, cool spell. It carries such significant weight. For our financial markets, this could mean a collective sigh of relief. Investments might find new wings, gently lifting portfolios and restoring confidence. It's the hope for calmer seas, where the worry of constant turbulence might finally subside, allowing growth to blossom from a more stable foundation. And then there's the housing market, the very foundation of so many families' dreams. A rate cut could breathe new life into aspiring homeowners. Imagine the relief, the renewed hope as mortgage rates potentially ease. Suddenly, that longed-for home, that quiet sanctuary, might feel a little closer. Our daily lives, our decisions to spend, save, or invest are deeply entwined. A cut could spark a gentle resurgence in consumer confidence. It's about feeling a bit more secure, perhaps making that long-postponed purchase, knowing the economic winds might be shifting in our favor once more. But every path forward holds its own shadows, its own risks. The balance is so incredibly delicate, like walking on a tightrope across a vast canyon. What if we ease too soon? What if those ripples become waves, pushing prices higher again, reigniting the very inflation we've worked so hard to quell? The specter of inflation, a shadow that haunts our grocery bills and fuel tanks, could return. That feeling of prices slipping out of reach is deeply unsettling. For families, this means the constant worry about making ends meet, watching their hard-earned money lose its value. It's a heavy burden to bear. Yet, what if we wait too long? What if caution turns into hesitation and the economy, already fragile, sinks deeper into a painful recession? The fear of lost jobs, of businesses closing their doors, of dreams deferred, this is the heavy price of prolonged economic stagnation. It's the quiet anguish of watching opportunity dwindle, a sense of being stuck, unable to move forward, unable to build for tomorrow. This is the profound dilemma facing the Federal Reserve. Two difficult paths, each with its own set of hopes and heartaches, its own potential fallout. It's a balancing act of immense gravity, requiring not just data and models, but a deep understanding of human resilience and vulnerability. So, what does the path forward truly look like? It's not a single, clear road, but a series of interconnected choices, each with profound implications. The Federal Reserve, like a careful navigator, must constantly adjust its course, guided by the currents of data and the changing winds of the global economy. Their aim is not just to control, but to nurture, to create an environment where prosperity can genuinely take root and flourish for everyone. There is a fragile hope, a glimmer, that with careful stewardship we can navigate these waters, avoiding both the torrents of inflation and the doldrums of recession. As we look ahead, the story of our economy is really the story of us, our struggles, our triumphs, and our shared journey toward a better tomorrow. The next chapters are still being written, penned by policy decisions, global events, and the unwavering spirit of everyday people. Every decision, every shift in policy, sends ripples through our lives. It touches the cost of our groceries, the roof over our heads. We've weathered storms before, and each time, our collective resilience shone through. This moment, too, calls for understanding and patience. Remember, the economy isn't just numbers on a screen. It's the rhythm of our communities, the dreams of our children, the stability of our elders. The Fed's decisions are born from deep deliberation, weighing not just charts, but the very real impact on millions of lives. They are trying to bridge the gap between where we are and where we hope to be, finding that elusive sweet spot for everyone. Our shared hope is for an economy where growth is sustainable, where opportunities abound, and where everyone can feel secure in their future. This isn't just about policy. It's about our collective aspiration for a brighter, more stable tomorrow for every single one of us. Think of the Fed's next step as that single drop. Its ripples will touch every shore, every dream, every quiet moment of our lives. They are seeking direction in an ever-shifting landscape, trying to guide us through the fog with the steadiest hand possible. The foundations of our prosperity are built on these complex decisions, on finding the right balance between caution and courage. The road ahead is undoubtedly nuanced, but it is also one we walk together, hoping for stability and gentle progress. Ultimately, the economy reflects our collective journey. What kind of future are we building, together, in these critical moments? What are your hopes, your fears? How do you feel about the delicate balance they must strike for all of us? The economic dance never truly ends. It's a continuous flow, a delicate balance of human decisions and global tides. Amidst all the charts and forecasts, remember the quiet strength within each of us. Our resilience is the true anchor in uncertain times. May these conversations help us all find a little more peace, a little more clarity as we navigate the world's complexities together. As the sun rises, so too can our understanding and our collective spirit. The future holds endless possibilities, shaped by our choices. This journey through complex economics isn't just about numbers, it's about people, about you. What does this future feel like to you? May these insights offer clarity and encourage a deeper reflection on the forces shaping our world. Let's keep these vital conversations alive. Thank you for joining us. Please subscribe to a leading analysis channel for more deep dives and share your thoughtful insights in the comments below.